Hey guys, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are going to be joined once again from the team at Hut 8 Corp to talk about their exciting new HPC announcement this week, in addition to providing a business update and strategy for the remainder of the year. Now, before we get into all that, please take a second, smash the like button, you guys. Big help to myself and the channel. Anthony loves it. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below if you're currently holding shares of Hut 8, what you thought about the big press release this week, and how you think they're positioned compared to other players in the sector. Now, with that being said, let's get into today's interview. Okay guys, so that's right. Today's video, we've got the dynamic duo back from Hut 8 Corp, the CEO, Asher Genoot, along with the head of IR, Sue Ennis. Now, a lot of activity going on in this space, specifically with HPC over the last few weeks. And Hut 8 has joined the party with a massive press release just this week that we wanted to dive into in today's presentation. But before we do, Asher, Sue, thanks so much for making the time today. Really looking forward to this one.
Super excited to be back.
Great. We'll get right into it. Now, first and foremost, before we get into the HPC, we wanted to get a quick update on your monthly production results. We noticed we haven't seen one for May, and there's some rumors, I guess, going around that maybe you guys have paused or dropped these reports. Are you able to provide an update just on the monthly production side of things?
This month, we've had a lot of news that has come out to the market, and we took a step back to really think about what is the purpose of the production report. I think when the production report first came out, it was back in 2021. People valued companies on the machines they could purchase and the megawatts they can find, and realized not everyone can actually build and operate Bitcoin mining facilities. So the idea of the production report was, can you actually put all these pieces together and mine Bitcoin and actually succeed? Since then, I believe that our industry has evolved pretty tremendously in regards to companies being able to generate revenues from different parts of their business. I think some companies focus still on how many Bitcoin can I mine and how do I maximize that? Whereas in other companies, like for example, ourselves, we focus on how do we trade around energy dynamics in our Bitcoin mining facilities. And even if we mine less Bitcoin, we might still be more profitable, and we'll prioritize that over just how many Bitcoin that we mine, but more than just kind of the dynamics of how do you make revenue within the Bitcoin world. Because on the self-mining side, we have that dynamic. We also have a colocation business, which is the hosting business. We also have a managed services business. And now we have an ever-growing kind of AI business, HPC, and kind of a growth trajectory there as well. And so we felt that the focus on these reports were around one segment of our diversified business, which is an important segment. We'll talk about kind of our aspirations there and growth goals there as well. But we want to take one step back because we believe that the company, I mean, ever since I took over, has never been really understood because of the complexity of who we are and what we are. We're not a pure play. And we didn't want to have a thing that we did every single month that wasn't pure to who we are and properly kind of talking about our journey. Because if you look at the last two earnings that I've done, on those earnings, the stock went up both times in a double-digit fashion. And I think it allowed the market to realize what is happening in the business, where the production reports didn't fairly kind of talk about the business. And we did it because that's just what everyone else did. And I think as a business, since I've taken over, we've been okay being contrarian and being a little bit different. And I think a lot of the areas that we were contrarian in on machine purchases, focusing on power just in the last couple of months alone, I think those things have played out a little bit more. And we won't always be right, but we're okay being a little bit different and focusing on kind of how do we become true and authentic and being able to give that information. So for example, in our earnings, we continue to add more transparency, more metrics into ourselves as a business, but want to create holistic disclosures that kind of talk about who we are rather than kind of this document that people put out at a time when businesses were pretty simple from a mining perspective. And now that they're evolving and they're changing.
So in a nutshell, we're not saying that we're going to stop the reports. We just want to make sure if we're publishing reports monthly, that it's a better reflection of where this business is going where our strengths are and what we think investors and some of our investors, like for example, Coatue, which we'll get into, are excited about. So it's really just about representing the key parts of the drivers of this business. And that's what we're reframing. We are not saying we're stopping them. We're just reframing, and then we'll come out, when we can with what we think is a great representation and the best representation of where this business is going and how Asher's driving it. So yeah.
Gotcha. No, it makes sense. And it's interesting you say that, because Anthony and I have also been working on the back end on our website of how to display these other revenue categories, these other metrics, the PPAs, the megawatts, because obviously the HPC is now becoming a huge focal point, where actually you're right, before it was just traditionally Bitcoin exahash, number of machines. In terms of
even if you look at just Bitcoin and exahash, like one area that I think the reports haven't been authentic is it talks about how many Bitcoin you mine, which is an OpEx point, right? And then it talks about how much is your cost of electricity. What the reports don't talk about is how about all of your other costs, depreciation, amortization, SG&A, and a lot of that come out in the quarterlies. And when you look at kind of mining, if you gave me $1 billion, I could go get you a lot of exahash, assuming the power is there, right? But how much can I actually make back on that $1 billion in initial investment? I think the focus when we think about mining, it's a CapEx heavy business. And so does your profitability cover your return on investment in the actual infrastructure and the actual ASICs you purchase? And I don't think those questions have been asked. It's just been how many Bitcoin can you mine? How low is your power price? Not as what is your full and big cost? And how quickly are you paying back your initial investment costs? I was in a chat the other day and we were talking about it, and someone was like, hey, when we looked at machines that we purchased in 2021, we barely made back that money. When we looked at some machines we purchased in 2020, we made back like 5 to 8 times our initial principal that we paid to buy those machines, because obviously the cost per terahash was at an all-time high in 2021. And I think those conversations haven't really happened historically. And as the industry matures, there's going to be more focus, more responsibility put on our businesses actually operating well, and what are metrics that are evolving to actually keep everyone accountable.
Having been in this space for like 4 years, I'm probably one of the advocates who got a lot of the mining companies to get their monthly updates out in the first place. I know Hut, when they were doing it before I moved into the space, because they're one of the oldest miners. But a lot of the miners in my tables at the moment came in because I'd asked them to do monthly updates. So the self-mining, there is, I think there's a, and I have to tell retail investors, manage your expectation, because they thirst on knowledge and updates, and they, you start doing things, they just expect it month in, month out. And the amount of DMs I got this month because you hadn't released a monthly update, and all I'm saying is that I've asked for the update. They'll send out if they're going to send an update out, and that was it. I've not posted anything about it, but I replied to the messages. And Sue knows I asked before I was going to America because I wanted to get the article out, and it's your prerogative whether you want to put a monthly update out or not. Second point is, you're absolutely right in terms of now where we are now compared to where we are 3 years ago. Pretty much everyone was a Bitcoin miner. Some of the companies were doing hosting, and even Hut 8 were doing hosting at that point in time in a small amount there. But everyone was focused just on the self-mining. I think because of the involvement of the industry into more into integrated businesses, I look at you guys with what you do there with your managed services, with your hosting, with your self-mining, with your HPC, and again with other miners, maybe like BitDeer, whose self-mining is actually a tiny part of their business. And it's what Bryce is saying. We're trying to look at how do we put the focus on everything. I mean, the self-mine is quite easy because it's the metrics are there for people to utilize. And I came up with the Bitcoin per exahash metric, so blame me for that one. The reason I came up with that is because it's the only way you could actually compare. You could compare companies. So everyone's got a different hash rate. Yeah. But it's how you use that hash rate, and it doesn't give the whole picture. And I state that in when I update, it's about just a one metric on production. And Some miners are keen, they're very competitive, they want to be in those tables, and believe you me, and it's generally the ones that are at the top that want to be in every month and get their updates out quickly and all that. But I hear where you're coming from. We're trying to work something out to cover every service, and rightly so in this day and age. Now we'll come on to that with your recent contracts in a second. But before we talk about that, having just discussed the self-mining and the fact you've got the services, in the next sort of 12 to 18 months, what is your focus, and what you're going to be putting your energy into over that period of time?
When we look at the self-mining part of the business, we kind of take one step back and look at our energy profile. We have about 1.1 gigawatts of net new growth in our pipeline, right? And those are exclusive contracts that we've signed that were exclusive on that power. That doesn't include all the other assets that are not under kind of that bucket. And when we look at those assets, some of those assets are great for kind of this growing use case of AI HPC, but others continue to be core and true to being great Bitcoin mining assets because they help with grid reliability, grid stability, and the curtailable element of these facilities are critical to the energy partners that we work with. I've said this from kind of day one when we first started looking at HPC and talking about it more, that we see this as a net new growth factor for us rather than a pivot or a focus or a diversion of responsibilities and of growth and momentum. So you'll see accelerated growth from us on the self-mining side and on the Bitcoin mining side. And that's primarily because we've just been patient. CapEx we're very, very sensitive to because of the cost of the ASICs to purchase. And Bitmain just came out with the new machine, 12 joules per terahash last week. We're really waiting on kind of that next leap and step function of efficiency increase, which doesn't necessarily mean we'll just buy that machine because it's lowered pricing across the whole board. But from a self-mining perspective and from a Bitcoin perspective, managed services, colocation, we have a full team that's vertically integrated from building to operating to software stack to data science. And that team will continue to be focused on the Bitcoin mining side of our business. Meanwhile, we aggressively expand the HPC and AI side of our business.
So moving along into that HPC component, Asher, let's talk about that. So you came out with this massive $150 million announcement this week, partnership with Coatue. Can you give us the details of how this is going to work, when it's going to start up, kind of the inner workings of the deal, similar to what we saw kind of from Core Scientific and the CoreWeave structure when they went through it in their investor day there?
When we looked at, since I took over, we've had a lot of investors reach out and look at investments, and I've shared with the market that we believe that our stock is undervalued and that we're sensitive to dilution, and that doesn't change. So when Coatue came to the table and we were discussing their interest in the business, I think they saw that this was kind of a misunderstood company that was being undervalued, that was trading near cash. And when we kind of came to the dollar amount, there's a dollar amount that we were comfortable with that wasn't too big where it had too much dilution, but it was meaningful enough for a fund their size to actually really want to be a partner and help us grow. And instead of structuring it as kind of a pure equity instrument, because again, dilution, value of the equity, and so forth, we structured it as a convertible note. At the time, at the term sheet, that converted at a 50% premium. And as we were kind of closing the definitives, the stock went up a little bit during that period. But they don't convert into common equity until around $16.40 a share, right? So our dilution, we were able to get at a much kind of higher valuation of the business, but we were able to get them in earlier, bring in the capital earlier to fund that growth. And when we look at our balance sheet, we already have 9,100 Bitcoin, which is a pretty large and substantial balance sheet. But I think Coatue is a very strategic investor for both our sector. It sends a signal, and also for our business. I think Coatue has been one of the most top performing and kind of reputable funds of this last decade in the technology sector. They're very deeply involved. Over 50 investments in the AI sector, everyone from the CoreWeaves to the OpenAIs. And they're one of the largest holders of a lot of energy companies as well. They own data center companies, so a large breadth. And they see kind of the problem set that exists today, which is you have this increasing demand in this pool from AI use cases. And we're really just at the start in the beginning of AI kind of really being involved in our day-to-day life and really kind of like getting adopted across all parts of the business. And so today, if you think about AI, most people don't actually experience AI in their day-to-day unless they use ChatGPT and they play around with some of these tools. But in the day-to-day kind of ecosystem of things that we use, AI isn't deeply integrated yet. And so we believe that there's a long runway of continued adoption and continued penetration. And so what does that mean? There will be more and more need for compute. And there will be more and more need to run larger models that are interconnected. And so when we look at kind of the data centers that are able to support that compute, NVIDIA stock has obviously been ripping and has been doing very, very well. But if they sell those servers have to go somewhere, right? And when you look at existing data center infrastructure, they were built for 5 to 15 kilowatts per rack. And they weren't built for right now, like the H100 around 30 to 40 kilowatts per rack. We've seen some innovation in the hundreds of kilowatts per rack. That power density requires power, but also requires cooling density. And that's why liquid to chip is a big thing that everyone's talking about today. And liquid to chip is very different. Some liquid to chip only cools 50 kilowatts per rack. So you require innovation, you require fast speed builds, and you require kind of the work ethic and the mindset of let's sprint, because traditionally data centers you build across years, not how do we get this online as quickly as possible. And so it creates a really interesting dynamic for a business like ours, where we focus really heavily on power since the day that we started US Bitcoin and merged with Hut 8. We have focused on building our own facilities at a low cost, at a fast speed, on innovating on infrastructure and designs. And I think taking those talents, applying it to this sector that needs growth and rapid growth to supply the demand that's there, and bringing energy with AI demand, with these relationships, we thought Coatue was a perfect partner because they have a seat at the table with all of these kind of partners that we are or wanting to work with. And they have the aligned vision of what this could become and the opportunity here.
A couple of quick follow-up questions on that, Asher. In terms of obviously that investment, question one is, what's now going to be used for in terms of size of infrastructure to deliver for them? And secondly, if the share price gets above the $16, are we saying then it's an automatically they'll receive shares for that funding, and that'll make them a reasonable size investor? Does that have any impact on the company at all, that from that position?
So the term of the convertible note is it's a 5-year term. We actually have 3 additional years to extend up to 8 years, because the one thing I've learned is the space is volatile, and I don't want a situation where we have something due and it's a bear market, et cetera. So we wanted 3 years of flexibility to manage through if we have the note outstanding. And at above 1640, Coatue has the right to convert. But there's a 2-year non-call. When the share price is above 24.59, that's when there's like an automatic conversion right after the first 2 years. And so for them, they're like, look, we want 2 years where we don't convert because we have funds and we have to manage kind of our funds, but we want to give you a lot of value, and we don't want to just make some money off of the investment. We want to go and really grow this business and roll up our sleeves and build with you and really accelerate growth. And we don't want to have to look at kind of the mark to market of our investment. And that's why, like, a lot of times they invest in these high growth kind of private companies, because they just are able to help propel that growth until the company goes public. So it kind of mimics that ability for them to be able to not have to look at mark to market, but fuel growth, and then be able to reap the benefits of that kind of 2+ years from now.
Yeah, that's sensible. And so going back to the first question, can you talk about what? Yeah. When you get 150, what you're going to specifically use that for?
150 million is for growth that we have. And so that's growth within kind of the infrastructure vertical, and growth within kind of, obviously we have AI chips coming as well. And you'll see more announcements from us regarding kind of the growth we've had in our pipeline. I know we've talked about the 1.1 gigawatts for a little bit of time now, and you'll see some of that come to fruition. And we're looking at kind of continuing to grow that pipeline. And look, Coatue, this was a kind of transaction where they did their diligence. It wasn't they just looked at our stock, they bet on us. Like, we went through a long diligence process. I got a lot of messages from folks going, it's a badge of approval you were able to get through the Coatue diligence process and have them want to kind of bet on you all. And so I think they're excited by what our future has, and we're now heads down, relentlessly continuing to work to execute.
Yeah. So the key thing is that they know what's going on, and when you're ready to announce it, everybody else will know when that happens. Yeah. Oh, excellent. Thank you.
Now, continuing on with that future expansion growth opportunities, Sue, I know we were kind of chatting about this before we started filming. What are you seeing from an institutional investor standpoint? Are you starting to see more institutions interested in your company in this space as opposed to retail, or what do those conversations look like?
So retail will always be incredibly important to Hut 8. We have a ton of respect for retail. We really value retail support in our stock. But in the past 3 weeks, the amount of inbounds I've had from institutions who have effectively left me on red for the past 3 years, wanting to talk about HPC, AI, but also power, because everyone knows that the overlap here between the Bitcoin mining space and the AI space is really that power, that interconnection. So that's been tremendous. Again, very long, sticky institutional money is making real plays. And effectively, the feedback I've been getting, and also our corporate development team has been getting, is the institutional perspective on a lot of these miners, particularly the ones who already have the AI HPC pivot, is that we are now the emerging data center REITs trading at a tremendous discount to what REITs normally trade at. So it's super exciting. I'm insanely busy, but I'm extremely excited just about the new relationships that we're building. So
in terms of the HODL, I mean, the last time we had an update, it was well over 9,000. What's the plan moving forward on having that HODL? Are you still sort of inclined to utilize it, or you would even envision selling some Bitcoin to meet some of your requirements this year?
The HODL has continued to remain strong, so we continue to have over 9,100 Bitcoin, and we continue to have that exposure. As we have always kind of shared, like when we look at new investment opportunities, we look at what is the lowest cost of capital at that moment in time. And we'll share more about kind of some of the HODL strategies that we've had that have been able to generate yield in this last quarter as well when we have our earnings. And so we've been active there. When we look at kind of the HODL position, look, I think really it's about exposure for our shareholders. And so as we look at growth within different data center infrastructure, ASICs, et cetera, if the cost of capital on the equity side or debt side is really high, and we believe we can basically use our balance sheet, deploy, and then bring in more capital to get to a similar balance sheet position, that's the way to grow in the least dilutive fashion. And so I think we continue to be open to just make the smartest decision at any given time. But luckily, over the last couple of months since I've taken over, we've had enough cash to kind of fund Salt Creek and some of our growth aspirations. We just got another $150 million as well to continue to fund growth. And so I think for us, there's no push that we have to sell Bitcoin because people want that exposure and people continue to want that. And so the opportunity to sell Bitcoin will arise when there's great investment opportunities that we believe are swap and exposure and can give us accelerated kind of returns in a risk-adjusted manner.
Also, so I know that retail, you had some questions about seeing some of our coins move, like 3,000 of our coins moved. We filed an 8K on Monday. We just moved wallets. We did not sell 3,000 Bitcoin. It was just simply moving wallets. And you can find that in our 8K, which we found.
We got a much better rate on our custody fees. And so it dropped by 66%. And so made a pretty big impact on being able to drop fees. So that's why we moved a lot of the Bitcoin.
Oh, good. I mean, in terms of when we spoke last time, one of the areas that we sort of like had a look at was the debt from a current liability position, because obviously it's not a small amount that you've got to sort of manage this year. So can you tell us more about how that's going to be funded?
If you look at kind of the pieces of debt that we have, we're very thoughtful in how we structure it. So I'll kind of break down. We have four instruments of debt today. We have the Coinbase loan, which we renewed and we filed the 8K this week on. And so we just basically rolled that forward. It's a Bitcoin-backed loan. The difference in the renewal is we actually got rid of the parent guarantee. So there is no parent guarantee now. It's just on those specific Bitcoin it's encumbered again. So it's isolated. I think of it as like project level financing, isolated risk to those Bitcoin. The second tranche is our acreage loan, and that loan is basically secured against a portfolio of machines. We have a 5-year note. That one does have a parent guarantee, but the servicing on that loan is the cash flows of those specific miners. So if the miners generate $1 million a month, we service $1 million. If the miners generate $5 a month, we service $5. So it gives us a lot of flexibility in managing that, because when you look at 2022, it was all around kind of mismatch of revenues versus liabilities. The third tranche of debt is at our joint venture on the King Mountain side, and that's similar. When we bought that site, it was 280 megawatt site. We own 50%. We only put $10 million down, which we also finance on the project level, and we own the whole thing. That $10 million we pay back, so that was the AL loan that was outstanding. We paid that back at the beginning of the year, and now we're paying off this piece of debt. So we basically own the site for not putting a single dollar down, and we own a site that generates really great economics. And so that piece of debt as well, cash flow sweep, no fixed payments, 5-year note, no parent recourse. The only recourse it has is to our equity interest on that on that JV. And then the last one is the new Coatue convertible note, and we see that as quasi equity, because the whole reason we did it was we believe that the company is going to be a lot more valuable during this period of time. And this gives us a way to not sell equity today, bring on a really strategic partner. And we hope that over the course of the term of this loan, that gets converted and everyone is happy and successful.
Appreciate the detail there. I know you guys are super busy. Obviously, a very exciting week for Hut 8 Corp on the backs of this huge press release. We wanted to get you guys on here, add some context, some detail, and appreciate you giving an update on the monthly production reports as well. I'll pass it back to you, Asher or Sue, for any closing thoughts, but we really appreciate the time, and congrats on the huge accomplishment this week.
Thank you guys for having us on, and we appreciate everyone's patience in the business. I know we've taken not a typical and a more contrarian approach to how to build this business over the last couple of months since I joined. I joined February 7th. The stock was $6.77. We were at an all-time kind of low in that period of time since we merged. And really, we just focused on making the right decisions to build the right business over the long term that was sustainable. I think some of the fruits of that labor kind of coming to realization, even in a shorter period of time than I thought. And we'll continue to focus on making the right decisions and being long-term greedy and building right value for the right reasons.
We'll be here with ears and eyes open. You guys hit the like button, subscribe to the channel if you're not already. If you have any additional questions for the team at Hut, feel free to leave them in the comment section below, and we'll see you guys tomorrow.